Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we're going to address head-on a really important question that most people who are getting close to retirement have, or even people who are already retired. And that question is, do I have enough? Is there a chance that I could outlive my capital? So if you want tips on how to address that question head-on, then be sure to watch this video. You'll enjoy it. Now, if you're new to this channel, make sure you hit the subscribe button. We're posting content all the time on different aspects of retirement. So hit the subscribe button and the notification bell so you get alerted to future content. Okay, let's talk about this really important question. The question is, will I run out of money? Is there a chance that I could run out of capital? So when it comes to addressing the question, how long will your money last, there's different ways you can approach it. You could throw a dart at a dartboard and hope for the best. And unfortunately, too many people do that. But the way you want to approach this is through really financial analysis. Now, harnessing the power of financial calculators is a really critical tool in your journey towards retirement or being retired successfully. And these financial calculators allow you to take this nagging doubt and in a concrete way address head-on this question about, can you spend at the rate you want to? And if not, what is a spend rate that's appropriate for your situation? And ideally, you want to address that question well before your retirement date. Now, when it comes to financial forecasting, there's two main approaches. One approach is a detailed spreadsheet. I call these spreadsheets on steroids. And those are the kinds of spreadsheets that we utilize for our own clients. So they're very detailed, and they allow people to really drill down to the finer details of their plan. How are we going to fit together their TFSA, their RSPs, their RIFs, the LIRAs, their open accounts, their corporate accounts, CPP, OAS, their pension plans, calculate tax, look at the cash flows in detail. And that's the approach that I would recommend, particularly if you're trying to develop a really detailed plan. But if you just want to have a basic estimate so you can sleep at night and know that you're tracking generally in the right direction, then you want to take a look at using financial estimates and basic calculator. So the first thing we're going to do is we're going to go to our website, so the Humphreys Wealth Group website. Let's go there right now. And you're going to go to our homepage, and then I want you to click on Toolbox. When you do that, it's going to take you to a page that has various resources. I want you to go down to Online Financial Calculators, click that. It's going to take you to another page that has a whole bunch of calculators, and in future videos we'll talk about some of these other calculators. But the one that I want you to go to the section Retirement Planning, and this calculator that says, will the money last? In other words, how long will your money last? We're going to take a look at some specific calculations in this particular area. Now, before we go to the calculations, what I'd like to do is go back to some assumptions we're going to use for these calculations. Now, when I talk about simple estimates and detailed spreadsheets, there is a link in the notes for this video that will take you to some examples of forecasting documents that we provide for clients, as well as a video that covers our detailed forecasting model. So I'd encourage you to take a look at that if you want to see the forecasting on steroids. But we're going to cover today is, like I said, this simple estimate so you can sleep at night, so you can at least get to the point where you sit down with a retirement coach, you go through more detailed analysis and really look after the finer points of your retirement planning transition. Now, before we do that, what we need to do is make assumptions about this analysis. So first of all, we're going to make the assumption the person's age 60. And so if you're in a couple situation, you can do this analysis twice to get a sense for your total family income when you retire. The investment account is worth $600,000. The old age security benefits when this person turns age 65 in today's dollars is $7,384. Canada pension plan benefits, we're assuming they take it early, will be $9,244. Now, the old age security, they're not going to get until age 65. They're retiring at age 60. So we're going to assume that there'll be some part-time work from age 60 to 65, and then they'll start taking their old age security benefits. When all their benefits are fully on, they're going to get about $16,628. And what they want to do is find out how much more money they can generate from their portfolio using a simple calculator, and to see whether on a pre-tax basis that money is sufficient enough to maintain their lifestyle. Now, before we go into the calculator, I just wanted to take a look at the Government of Canada website, because this is the point at which you may want to just kind of lean into government benefits a little bit. So let's go to the website. So here's the Government of Canada website, the Canada Pension Plan Retirement Pension, how much you could receive. And there's some good sections here, an overview, do you qualify, application process, how much you will receive, other benefits, when to start your pension plan after you apply. So it's a good resource page. There's a income calculator here as well. So I would encourage you to go to this page and digest some of this information. And the link that you can see here on the page, I'll include in the notes for this video as well. Okay, let's go back to the calculator now. Now, just before we go to the calculator again, let's look at some assumptions. So some background assumptions. We are assuming life expectancy to age 85. This is where you have to plug in your assumptions. Do we have a long life expectancy past the age of 95? Is it average life expectancy? So in this example, we're using age 85. We're assuming that the income has to be inflation adjusted at 2% per year. We're looking at a 25-year plan. Again, we're talking a 60-year-old, so we've got to push that money out to 25 years to age 85, and that all assets will be fully depleted by age 85. So we're not looking to preserve any value. We're assuming that age 85, you're dead, you're gone, and we've used all that capital up at that point. So let's take a look at the calculator now. So this calculator gives us two scenarios, scenario 1, scenario 2. And so what I did is I put in the $600,000 of capital for both scenarios. Scenario 1, the rate of return is 2.5%. Scenario 2, I used 4.5%. So I'm trying to look at the implications of different approaches to the portfolio. Annual income that we were able to generate, and then we have this inflation rate. So if I got 2.5% on average from the portfolio, my maximum spend, if I was being fairly conservative with the account, would be a pre-tax income of $26,000 per year. That's on top of those government benefits we talked about before. If I look at scenario 2, if I could get another 2% return, so basically a balanced portfolio, not hyper aggressive, I'm looking at a 2% increase every year. For 25 years, I can generate $32,000 per year. So we're talking about a $6,000 per year difference between the two portfolios. $26,000 per year at 2.5% and $32,000 per year at 4.5%. Now this is where the calculator can be very helpful for you. So take a look at your portfolio and run your numbers, and then compare the numbers you arrive at to what you think you need to be generating to maintain your lifestyle. That's really the critical question. And then if you find the numbers are lining up, then you're going to have peace of mind. Let's say you run the numbers and you find that you use a conservative rate, but you're not generating the kind of cash flow you'd like to have. Well, that means you might have to take a slightly different approach to your portfolio. So the simple calculator gives you a way of parsing different assumptions and what their implications are, so you can begin thinking about the approach you want to take to your retirement income plan. Ultimately, it becomes much more constructive if you can do this and then walk into your retirement coach's office or advisor's office with some of this background being done, because it's very helpful. Get your head wrapped around some of the key issues. Now, in addition to that, it gives you these reports, and I can look at scenario 1, I can look at scenario 2, and I can see how the income changes over time. So you can see that year 1, we started with the $32,000. And by year 18, we're sitting at $44,000 because of the inflation adjustment. And we keep spending at that rate, and then eventually you can see there's no balance in the portfolio. So again, you can compare the two scenarios, and then what you can do is you can also print or create a PDF using the data you entered for this particular assumptions for this analysis. So here's a very quick summary. So scenario 1, we had $26,000 per year indexed at 2% from the portfolio pre-tax. We had government benefits of $16,000 approximately for a pre-tax income of $42,000 per year. Scenario 2, we were able to generate, using a slightly higher return, $32,000 per year, $16,000 per year in government benefits for $48,000 per year of pre-tax income. So this is just one example of how you can use these financial calculators. So a couple of takeaways. First of all, take a look at your expenses today and plug in what you think you need to be generating from your portfolio and investments to replace that income if you're retired, no longer working. And what you might find is that you're going through the capital way too quickly. Rather than that money lasting until age 85, it lasts to age 70. You definitely do not want to have more life than income when you do this planning. So it'll allow you to deal with that sort of unconscious, subconscious worrying that can go on by looking at these numbers in a very direct kind of way and then making adjustments. The other thing is, make sure you go to the Canada Pension Plan website, begin researching the information and the benefits that you can receive. So that would be a good exercise to go through as well. Well, it's my hope that this overview on financial calculators has proven helpful for you. And if you're looking for additional resources on retirement coaching, there's a link to our retirement coaching service, as well as a link to our financial forecasting model that's very robust, and a link to our website so you can grab hold of the different calculators and tools to do your own forecasting as well. Again, if you haven't subscribed to our channel, make sure you hit the subscribe button and notification bell so you're alerted to any new content that we're producing on these and related topics around retirement income planning. All the best in your retirement planning journey. Take care.